You're launching a new financial brokerage. You're probably laser-focused on the platform, the licenses, all the capital. But what if I told you the single biggest factor for success is something most founders just ignore? Today, we're going to dive into why public relations isn't just fluffy marketing, it's actually a fundamental tool for engineering trust.
And this quote, it gets right to the heart of it. You know, most new brokerages don't fail because their tech is bad. They fail because they're obscure. They fail because, in this crazy crowded market, no one, and I mean no one important, even knows they exist. Invisibility, that's the real enemy here.
Here's the hard truth. Your first impression? It's not your slick new website. It's not your trading app. It's a Google search. This is the very first thing your most critical partners see. Before they even dream of talking to you, you better believe they're searching your name.
And you've got to ask yourself this question from their perspective. A trader might be curious, sure, but a compliance officer at a bank or a risk manager at a payment provider? For them, a blank search result isn't just a lack of info, it's a massive, flashing red flag.
And that leads us right into our first big point, the invisibility problem. In the world of finance, it's pretty simple. If you can't be found, you can't be verified. And if you can't be verified, well, you can't be trusted. It's really that straightforward.
So let's think about who's actually doing all this searching. Of course, you've got traders looking for a bit of social proof. But the big ones, the banks, the PSPs, the institutional clients, they are doing some serious due diligence. They're not looking for hype. They're looking for signs of a real, credible, and frankly, operational business.
Which brings us to this core mantra. No press equals no trust. A lack of a media presence isn't seen as you being new or humble. No, it's interpreted as a lack of legitimacy. In their risk analysis, you're not just a startup, you're a total unknown, and that's a risk they're just not willing to take. So, all of this creates what we call the perception gap. There is this huge disconnect between what new brokers think is important versus what their absolutely essential financial partners are actually looking for before they'll even consider doing business with you. And this right here is the perfect example of that gap. You could spend a year and an absolute fortune securing a top-tier license, thinking, yes, I've made it. But from a bank's point of view, that license, it just gets you in the door. It doesn't automatically earn their trust, because believe me, they see thousands of licensed brokers.
Look, this comparison lays it all out, plain and simple. On the left, that's your checklist. License, website, tech, check, check, check. But look at the right. The bank's checklist is completely different. They're asking, where's the media presence? What's the public story here? Is there any kind of third-party validation?
So the crucial point is this. Perception is so much more important than paper. The documents you hold are, of course, vital, but how your firm is seen out there in the public, the story that Google tells about you, that is often way more influential in their decision-making.
You know, this is so important it actually has a name. Invisibility risk. And this isn't just some vague idea. It's a real factor in formal risk assessments. Being invisible makes you a high-risk entity by default. And that right there is why so many new, fully licensed brokers get their applications for bank accounts and payment services flat out denied.
Okay, so how do we fix this? That's where engineering credibility comes in. This is all about proactively using PR, not as marketing fluff, but as a core strategic tool to build the exact digital trust signals your partners need to see. The very first step here is a mindset shift. PR is not about creating hype. It's not about going viral. For a new brokerage, it is all about strategic positioning. It's about deliberately, professionally shaping your public footprint to communicate stability, credibility, and expertise. And here's how it works, in 3 simple steps. First, press releases create your initial digital footprint. Suddenly, boom, you exist. Second, features in industry news provide that all-important third-party validation. And third, a consistent stream of communication, well, that signals you're an active, serious, and ongoing business.
And this is where it really hits home, the tangible impact. With that validation, bank onboarding becomes so much smoother because you've lowered their perceived risk. PSPs see you as a much more stable partner. And institutional clients, they can onboard with confidence, which just accelerates your growth.
But the real power comes when you stop seeing this as a one-time launch thing and start seeing it as a long-term compounding strategy. This is where you build a real, lasting competitive advantage.
Just look at this timeline. At month 1, you simply exist. By month 6, with consistent effort, you're seen as relevant. By the 1-year mark, you're a recognized contender. And after 2 years of this, you're not just in the game, you're becoming a market authority. You see, each action builds on the last. So really, you're left with a tale of 2 brokers. Broker A launches quietly, stays invisible, gets labeled high risk, and just struggles to grow. But Broker B? Broker B launches with a PR strategy from day 1. They are visible, they become trusted, and their business is built to scale.
Ultimately, it all comes down to this. PR is not a short-term campaign you run and then just forget about. It is a corporate asset. It's something you build over time. It protects your reputation, it establishes your authority, and it unlocks doors that would have otherwise stayed shut forever.
So as we wrap this up, I'm just going to leave you with one final thought. When you get ready to launch, are you just flipping a switch to go live? Or have you actually done the work to go credible? Because in the world of finance, only one of those truly means you're open for business.